Hello, traders. FX Pip Collector here. Today is Thursday, January 16th, and we're going to be looking at the dollar pairs today. And we're going to look at a couple of the JPY pairs. We're also going to take a look at gold, definitely. So, anyways, before we get started, make sure you do check out my free Discord channel. It is 100% free to join. You do not have to pay a dime ever if you do not want to. If you are interested in joining my membership, then you get access to all the benefits listed down here below for only $30 a month, which is a very, very cheap membership for everything you get. So, anyways, first thing first, I always like to check out the news calendar, make sure that we are aware of what possibly is going to happen today. Now, today we had the pound GDP, which was a little bit negative for the pound. The pound has been pretty weak over the last week or two anyway, so that just kind of added a little fuel to the fire. And today in the New York session, 1:30 UK time or 8:30 Eastern Standard Time, we have core retail sales and regular retail sales, and we got unemployment claims today. And we also have this New York Philly. I'm sorry, we have the Philly manufacturing index today also. So we have a pretty decent amount of dollar news today. So we'll have to keep an eye out for that. You know, a lot of big moves do normally happen around the news, so be aware of the news each and every day. So I always like to start off on the US dollar index because for me it is definitely one of my most important analyses I can do for the analyzing the dollar pairs. One thing I want to mention is that I still think that we're in a wave C. I think this is still either a regular flat or an expanding flat wave C. We have three waves of A, so ABC of A. We have three waves of B, ABC of B, and I believe this is now in a five-wave trend for the wave C. We are at the 78% Fibonacci retracement, as you can see, but if you zoom in a little bit, just because we have a bounce at the 78% does not tell us that we have a trend reversal. Do we have a breaker structure to the downside? Absolutely not. Do we have any significant lower high? Definitely not. The trend is up on these higher time frames, and there's no sign of it being over. This could easily be another correction to the uptrend. So keep that in mind when you're looking at the dollar pairs. A lot of my analysis on all of the dollar pairs is really primarily based on what I see on this US dollar FXCM index. So let's take a look at the euro dollar to start with. I do believe the euro dollar is in a big wave C, which I'm sure you already know if you've been watching my videos, but I definitely do not see any signs of this big wave C being over yet. Just like the US dollar index, we definitely do not have a breaker structure to the upside. We definitely do not have a significant higher low. This move up that we're currently seeing very easily and probably likely could be another correction to the downtrend. The trend is your friend. The market will tell us that when the trend is over by making nice big impulsive moves like what happened back here and nice big solid breaks of structure that hold. Moving down to the 1 hour time frame, to me it seems pretty dang clear what's going on here because this is definitely looking like an uptrend. Most likely it's an A or possibly if we're lucky a wave one. Now we're probably in a correction to that move up, which will probably end up looking something along these lines for an ABC of B or an ABC of 2. So most likely we are in a correction right now to the last move up. Best thing for you to do if you are a short time frame trader is to put your Fibonacci retracement from here to here and look for three waves down and look for a reversal at a Fibonacci level for either what would likely be a wave C or possibly a wave 3. So if we zoom out a little bit more, I would expect to see something like this for a wave C to one of these two fib levels and then back down. Or if we're lucky, it's a wave 3 and we get a complete trend reversal and we get that breaker structure on the daily time frame. So probably the best thing to do is to try to go long at the end of the B or 2 and then learn whether it is a 3 or a C. Hopefully learn and earn at the same time. So moving on to the pound dollar. Just like the euro dollar, I believe that the pound dollar is in a wave C on the weekly monthly time frame, but there's still no evidence of this wave C being over. And because of my time forecast, I actually think we're probably a minimum of 4 weeks out before we do get a real turn. So keep that in mind. Going down to the daily time frame, this pound has been very weak, mostly because of the pound. And my structure is still way up here. So unless I get a break of this structure, or unless I see a very significant higher low on this daily time frame, I need to keep in mind that on the shorter time frames, we're in a downtrend, and the trend is your friend, and we should be looking for shorts every chance we get. Going down to the 1 hour time frame, just like the euro dollar, even though this is a very different pattern, I think that we are probably drifting down in some sort of like a corrective wave B or a corrective wave 2. I still think this is an AO1, even though it's a little different than the euro dollar. We might go down, take out these lows, and then probably drift back up for either a wave C or a wave 3. I don't really think I would choose the pound to go long on because of the pound weakness, but it's probably going to do a very similar move. If it is a wave C, it'll go up to any one of these Fibonacci retracement levels and then reverse back down for an ABC correction. If it's a wave 3, then it would likely just bounce from those levels, never give you a break of structure, and eventually go up and break the daily structure, which would prove to us that we have some sort of a trend reversal on the much, much higher time frames. So let's move on to the Aussie dollar. Aussie dollar is actually becoming quite strong to the upside. I mean, my analysis is pretty much the same as the other ones. If we go all the way up to the weekly, I think this is a wave C of wave X. I think this is a W, X, and eventually up for a wave Y. So I think we're in the wave C of wave X right now on the weekly time frame. So taking it down to the daily time frame. Yes, we definitely did make a pretty decent move to the upside. But just like the other dollar pairs, do we have a break of structure? No. Do we have a significant higher low? Definitely not. What does that tell me? That tells me that the trend is still down. The market flow may be up, but the trend is down, which means that this could easily continue the downtrend, making another lower high on the daily time frame. It's probably pretty likely that it will do something like that. So taking it down to the 1 hour time frame, I think there's a good chance we're probably going to drift down a little more before we even think about going up. Let me zoom out a little bit more so we can see our fib levels. So we're probably going to end up doing maybe something like this. Just like the other dollar pairs, I think we have an A or a 1, we have a B or a 2. So the best thing to do if you are a short time frame trader and you are trying to get long is to put your Fibonacci retracement on this last push up and look for 3 waves down for a wave B or a wave 2. Then maybe you could get a long for the wave C or the wave 3. I personally am still basically waiting for the short. I'm waiting for it to go up to a Fibonacci level and make a nice engulfing move down to go short again for a wave C. Or if we are lucky, it is a wave 3. It goes up and breaks that daily time frame structure, proving to us that the daily is making a reversal. If the daily is making a reversal, then I definitely will be turning into a buyer long term in a wave 3. So just like the other pairs, it's either an ABC or a 1, 2, 3. You could potentially go a long way here and hopefully learn and earn at the same time, whether it's a wave C or whether it's a wave 3, especially if you know how to, use your Fibonacci levels and pay attention to structure. So the Kiwi dollar, I really don't analyze because it's exactly the same as the Aussie dollar as always. US dollar CAD is very, very, very rangy right now on the higher time frames. If you go all the way up to the weekly, I still think that this is I personally still think this is like a WXY, but I think that there's an ABCDE within this wave B of wave Y. It's kind of a mouthful, but I think this is an A of Y. I think we're now in a B of Y, and I think the B of Y is playing out in an ABCDE pattern. So at some point, I do think this is going to turn down very dramatically, but there's definitely no reason to think it's going to happen right now. We are very, very consolidated, as you can see on the daily, but there's no break of structure. The trend is definitely still up. What's that tell me? That tells me they could easily go up and make a new high. The trend is your friend until the trend proves that it's turned, which it definitely has not done so yet. Going down to the 1 hour time frame. So we'll have to see what happens. I mean, honestly, I would definitely recommend to everybody to be trading with the trend and looking for logs. But it seems to me after doing this for a couple of years that most people want to counter trend trade. So we have our Fibonacci retracement on here. We are, if you are looking for a short, then you need to pay very close attention to these fibs. If you get a nice bounce out of fib and a nice engulfing move down, you can potentially go short. I personally would rather just, focus on going long because the trend is your friend and the trend is up on all the higher time frames. Yes, I do think that the trend will turn down But based on my time forecast, I think we're probably still about 3, 4 weeks minimum from this turn that we've been waiting for. So just like I said on the daily time frame, I would be a little cautious because this thing might bounce from a fib level and go up, may bounce, go up, and make new highs. I would definitely recommend looking for longs for sure. Moving on to the US dollar Swiss, we are either in a wave A or we're in a wave 1 on the dollar Swiss to the upside. This whole move up is either an A or 1. The trading strategy is exactly the same for an A or a wave 1. It doesn't matter whether you know whether it's an A or a 1 because either scenario, you're looking for longs on shorter time frames, right? Now, a wave A or a wave 1 normally takes out the structure of the previous move, which we technically have not taken out that structure yet. So I think there's a very good chance that we will have at least another wave to the upside taking out that wave 4 structure. So keeping that in mind, let's take it down to the 1 hour time frame where we have our Fibonacci retracement on the last impulsive move up, which is very obviously a trend. This move down right here is very obviously a trend also, which is why I think it could be a wave A. I think, especially looking at the other dollar pairs, that it may push up for a wave B to finish like an A, B, C of B, then probably down for the wave C. Then if it bounces from a fib level, especially if you can identify a break of structure, that would make for an amazing long opportunity, and that's definitely what I would primarily be focused on, is trying to get long at the end of three-way pullbacks. But like I said, I feel like after doing this for a couple of years, retail traders just love to counter trend trade, and that's probably half the reason why 90+% of retail traders actually lose money in the long run. Moving on to gold. I've been saying this all week. I've been saying it for a couple weeks that this move up does look very corrective compared to this move down, and it still could end up making a lower high and going down. But I've been recommending for a while now that you should be looking for longs because it's still making higher highs, higher lows. It's probably in a wave B. It probably is going to take out these highs. It probably is going to do something like this for at least a couple more weeks before we get the big turn down for a wave C. So if you've been following along with the high, low, high, low, high, low series of structure, then you've probably been trading in the right direction, which is great news for you. Going down to the 1 hour time frame, I've been saying that if it breaks to the downside at a Fibonacci level, then I definitely would go short. Now, this is another good learning experience because yesterday there technically was a break. But I always say that a break needs to hold. It needs to be very obvious that it's a turn. It needs to break with momentum. It needs to hold below structure. Did that break of structure right there hold? It almost instantly pulled back. It rejected structure. A rejection of structure is actually a good sign that the trend is still going to continue in its original direction. So, just like I've been recommending for weeks, I would be looking for longs at the end of every single one of these little pullbacks that you see until the higher roadmap time frame tells you otherwise. There is still no reason whatsoever to think that this is over. If it bounces from a fib level and breaks structure with momentum, then definitely I would switch it up to shorts. But we do not see this picture, so we do not go short and get trapped into a shorting opportunity. Moving on to the US dollar again. I've been kind of waiting for this. I've been hoping that this was going to break structure. Now it is breaking structure, but we don't know yet because the daily time frame isn't going to close until the end of the day. This could end up rejecting structure, just like what I showed you on the gold on the 1 hour time frame. If this rejects structure, it may actually just go back up. If it breaks and holds below structure, then we probably have a real turn, and we should probably turn into a seller because then it's probably going to go down and eventually break this structure. So we need to pay attention to whether or not this break of structure holds. If it holds, I definitely will be a seller. If it rejects it, I definitely will continue to look for longs. Moving down to the 1 hour time frame. So yeah, 1 hour time frame. I mean, like I said, I'm paying attention to the daily to see if we get a rejection or if we get a hold. If you are trading these shorter time frames, I'm looking for shorts is probably the way to go, unless you see a break of structure to the upside. Preferably, the best thing for it would be to happen is if this made like a double bottom and then a break of structure. If it did that right there, then that would be a really nice long, in my opinion. If it doesn't do that right there, then if you are a short time frame trader, you should be looking for shorts at the end of all the rallies you see for potentially the big turn. Because if this really is gonna break below structure, it's probably the end of a wave B on the daily and probably the beginning of a huge wave C to the downside, which will last a very, very long time. So, anyways, moving on to the euro yen. The yen pairs, it's all kind of the same story. Whether the B is over or not, I'm definitely leaning towards the idea that the wave B is over. If this wave B is over, that means we're already going down in a wave C, and it's going to go down, take out this low and probably this low. So we have to be aware that we may be already turned. Unfortunately, the euro again has not broken structure yet, but it definitely has made a couple lower highs. So I mean, I would be looking for shorts unless the market flow turns back up. Then I would definitely switch it up and start looking for longs again. Moving down to the 1 hour time frame, I mean, like I said, we've been making lower highs, so looking for shorts is probably the best way to go, unless we get that double bottom and a break of structure to the upside on the shorter time frames. If you see something like this, you definitely want to get long because technically the trend is up on the daily. If you don't see something like this, then you definitely want to continue to go short every single chance you get. The trend is your friend. The trend is technically up, so I would be keeping an eye on long opportunities also. But while you're looking for longs, there's definitely been some pretty nice shorting opportunities as well along the way. Moving on to the pound yen, pretty much the same story. I am definitely leaning towards the idea that this wave B is over and that we're already in the wave C and that this is just going to keep on going. It's probably eventually going to go down and take out these lows for the wave A, for the wave B, and down for the wave C of wave 4. I do think this is a wave 4 on the very high time frames, the weekly and the monthly time frames. So taking it down to the 1 hour time frame, because we have that break of structure on the daily time frame, I would definitely have recommended to look for shorts ever since last Thursday, Friday. I would have been recommending that. So what does that mean? It means that you potentially would have gone short right there, which would have been a beautiful trade, definitely. So I would recommend looking for shorts unless you get a breaker structure up. And even if you do get a breaker structure up, it could just turn into another ABC correction and make another significant lower high, another significant lower high. The trend is technically down on the higher time frames, and if we really are in a big wave C, then we have hundreds and hundreds of pips to the downside ahead of us. So I mean, overall, for me as more of a day trader, swing trader, I definitely would be looking for shorts at the end of pullbacks. If you are like a short time frame trader trading below the 1 hour and you see a breaker structure to the upside, you can definitely look for longs. But you have to keep in mind that any move you see to the upside could very, very likely just be a correction to the overall downtrend on the much higher time frames. So as usual, as far as the rest of these pairs that I do not cover, I do analyze every single thing on this list every single day or every single weekday for my members. I also do share every single swing trade that I do take with my members at the time of entry. And we do 4 times a week. We do a hour and a half to 2 hour Zoom meeting 4 times a week where we look for setups and I teach people. It also comes with a trading course, 34 videos, 7.5 hours long. The trading course comes free with the $30 membership. So if you're interested in any of that, that is all found by signing up on my website, fxpipcollector.com. Or if you just want to be a free member of my Discord community, you can definitely do so. We have 5,700 plus members in the community, and the community itself is 100% free to join. I would love to build a community of like minded traders that are willing to help each other out. So even if you don't want to join my membership, definitely check out my free Discord community. That is linked at the end of this video and in the description of this video. So anyways, as always, I hope everybody enjoys the rest of their day and happy trading.